What's up, people? I hope we're all well. Welcome back to another episode of Sniper Sundays. In this series, I go over all of my trades taken within the current week, show you all of the breakdowns, all of the analysis, and then I'll give you some analysis for the coming week ahead so you can see what I'm looking at in the markets for the next week. This will serve as a taster to what you get in full inside the VIP group, where you'll get call outs to all of the trades as I'm placing them, weekly analysis breakdowns for all of the pairs that I'm looking at, etc. So within this series, you'll see all of the trades that I've taken and then some little free bits. And what we'll do is we'll log every single trade placed, how much they made, how much they lost, and in total how much we make each week inside the MonedaFX VIP group. So let's kick it straight off. Just a quick recap of last week. So here you can see all of the trades placed. That added up to 5.25%. And then likewise this week, we're going to go over all of the trades placed. I've actually started live trading to kick off 2025. So you can catch me live trading London session between 8 AM and midday each weekday that I'm trading. I usually trade most weekdays unless it's NFP or CPI or something like that. So we've just had NFP on Friday. I didn't trade Friday, intraday anyway, but my swings were still playing out. So you can actually catch me live and get these setups as I'm placing them. A couple of these winners this week were live. So this first trade that I'm going to cover, I took live on TikTok live. I don't know what I did on there, but it got the live took down. I've not actually read the fine print of what you can and can't do on TikTok live. I assume you could just trade live because I see everyone trading live on TikTok. But apparently there's some like fine print about you can't actually like place your buy and sell order on the chart because it's against their terms or some shit like that. So I've started just live streaming them on YouTube where I know I can do everything and show everyone exactly what I'm doing. So yeah, the second live that I did, which also had a winning trade, was on YouTube. So if you go on my account, you can see videos, shorts, and live, and you can actually watch the lives. Like the lives will save the video and post afterwards, so I'm not hiding anything. You can go back and watch that live and see me literally take these trades live as it's playing out in front of you in real time, so you can copy the trade if you want to as well. Anyway, enough talking, let's get into some trades. So this first position, pound US dollar, TP1 hit, TP2 hit. Let's have a look how that looked on the chart. So here is the trade that I took, 3.33 risk to reward. What we were basically looking for, I'm going to go on a clear charts, clear that, and I'm basically just going to go back and show you what happened here. So let's go back to Monday the 6th of Jan. Let's go just before, so we'll go like 10 AM here. Okay, so go back to here, put my EMAs on, looking on the 50. So as London kicks off, around about here, I'm looking at something I've not got on there is the Lux Algo session. So what I'm looking at is basically my session time zones, okay? So here's the Tokyo session. As London kicks off, we break through the Tokyo session, and it's clear to me that we're not having a change of character. So what you could see when London kicks off is you could see the Asian session get swiped, the liquidity gets swiped, then you have a change of character and it reverses to the downside. So that's one possible scenario that you look for when the Asian session finishes and London session starts. It's clear to me that that wasn't happening here because the Asian session high was broken through. We're finding support and pushing higher. So that gives me a bullish sentiment on the pound US dollar for this London session. Now, what else I noticed that is a confluence for me is the 50 EMA is being used as support multiple times. So here, 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 and here, each time price has came back down to this 50 EMA, it's found support and is raised, so it's gone higher, okay? So price has bounced off this EMA higher, okay? Now we're up to this high, and it's happened again here. I didn't originally look for an entry off this level because I want to see some form of confirmation before I enter. So the levels that I was actually looking for, if we get rid of this, is this low to this high. The reason I'm looking for that is I can see my fib levels are lining up with this EMA. So I'm looking for a level or a zone in the market where this EMA is acting as confluence with these fib levels. And I found that here with this low and this high. I then wait for some level of candlestick confirmations. So it was actually this candle that confirmed the entry for me, because we've got a hammer candle rejecting off of that EMA that we're looking at as confluence. From there, it's telling me that price is readily rejecting this level, which is between the 61.8 and the 71. So I'm at that point setting a buy limit on the 71% fib, which I showed in my live stream. I was literally sat with this level plotted on live, saying like, be patient guys, it should hit this level and bounce. Everyone else is trying to like panic buy in this little move here, but you know, as an experienced trader, I know to wait, find that higher RR setup, and we'll get it. So that's what we caught here. Caught this, call it out on live. Price hit our level, wicked through it. We could have even gone deeper with that entry, but we didn't. And we still managed to bag a 3.3R trade. So what I did is I took TP1 here for 50% at about 2.4, and then I took my last 50% out here at 3.33. If you want to play around with your TPs, feel free to do so. I mean, this one could have made all the way up to like a 7RR, but for me, my data has told me that it's just better to just secure that like 3% trade every time, because you know you can't expect to make like 7R every single trade. I might play around with something where I take 25% off at that TP2 and then let one run, maybe have a trailing stop, maybe set the stop loss at TP2, so you know, worst case is it closes out for what you would have made anyway. So I will experiment with those, but for now my data over the past 5 years has told me this is the best way to do it. It works. Now, yeah, I am optimizing for more, so I'll let you guys know on how that research goes. But yeah, that was the first trade. So first trade of Sniper Sundays down, we made 2.86% when you consider taking half at both those levels. So that was nice. Next up, we've got Euro USD, another 4% trade. This one again was on live. So let me find my Euro USD. It was this position here, and this was Wednesday the 8th, just before 11. So clear charts. Let me go to Euro USD, and then it was on Wednesday just before 11, so it goes like there. Cool. Okay, so this trade, very similar. You know what, I'm just going to bring this over, bring that onto the clear chart, set it up. Okay, so very similarly to last trade, but in the opposite way. Are we on the right day? Wednesday, yeah, cool. We saw, as I mentioned to you before about the Tokyo session, is we saw this liquidity get swept, change of character to the downside, and then it took that Tokyo low as well. So from there, because price kept extending, I'm looking for it to keep taking out other session lows. Okay, so my bearish for the day now is my bias for the day is now bearish. Okay, so this is why I'm looking for sells in the first place. Take that off, and then if we go to the 2-minute time frame, which is where I took my entry from, you'll see again with the EMA, price is making lower lows, lower highs, and it's respecting that EMA. It might not be bouncing off it every single time, but price is failing to close above this EMA, and it has shown signs before where it taps the EMA and retraces from it. So I'm looking for this to act as a confluence in line with my fib levels, so plot from that high to that low in this case. So you got to imagine price was like here. I'm looking for a retracement up to this EMA in line with the fib levels, show some rejection, and then sell off to the downside. So from this high to this low, this is where we were looking. If I analyze our area of interest, I waited for this candle. Okay, so this was the candle. I think I actually took it from this high, actually, looking back at the trade. Yeah, my my fib was from this high. So I went even more specific. So I took from this high to this low. My area of interest was here, like this. We had a previous high to be liquidated. That's nice to see because it's sort of bringing money into the market in our direction. When we had this rejection from the EMA, from the fib levels, it was rejecting off the 71. So I kind of knew I could get a deeper entry, and I set this from the 78.6. Stops couple ticks above that previous high, sorry. And then TP2 down there. Does that look about right? No. What have I gone wrong on there then? Ah, of course, TP2. Sorry, I'm using my swing TPs. Take that off. Yeah, there we go. That's about right. So from this high to this low, area of interest, fib, rejections from the EMA. This is a trade that we took. This was actually live on Wednesday, so this isn't just me saying like, oh, this is what I did and making it up. I literally called this one live. So you can go back on my YouTube and see the live, and you'll see this trade. Like actually see me execute it live at the time. So absolutely no bullshit here. If I go on the 1 minute, one thing you saw me do on the live, which I'll demonstrate here, is I took off the 50 EMA and I put on the 100 EMA and looked on the 1 minute. So that's why on that video, you see me do it on the video of course, but if you just look at the thumbnails and the screenshots, you'll see a thin black line, not the purple line. This black line is my 100 EMA on the 1 minute, which of course is exactly the same line as the 50 EMA on the 2 minute, because it's obviously 100 times 1 is the same as 50 times 2, but you guys know that. So yeah, here was a trade we took on Wednesday. This one, TP2 was about 4.6, TP1 was about 3.5. Oh, wrong screen. So yeah, TP1, TP2, you saw that one called live. That one made 4% in that trade. So that was Wednesday, that was nice. And then the little, clear that off, the little trade that you saw me scroll through when I was going back in time, let's find it, was on Thursday. Yeah, this was a loss. The idea was right, the idea was valid. Losses in trading happen. Doesn't mean you've done anything wrong. It's because trading is a game of probability. Whenever you're executing a trade, you're not saying that this is going to happen. You're saying that the sum of when this happens minus the sum of when this doesn't happen gives you an edge on the market. So it's profitable. So it's basically saying that whenever I win versus whenever I lose, add all that up and I'm winning overall. Okay, so trading isn't a science where you're saying that input is directly correlated to output. It's not like that, and that's what kind of makes it hard as a beginner. Is it's hard to deal with losses as a beginner when you're not sure what you're doing is right in the first place, because you can do things right like this. Like this is exactly the same trading setup as the other two. You know, Asian low's been swept. We're using it the low as a new resistance, pushing lower. We've got rejections from the EMA. So here my trade was fib from the high to the low. We've got rejections from the EMA and the fib. So I actually took a higher entry off of this double top being liquidated. But yeah, took a stop loss. It was worth it for a 6.5. But yeah, the thing about trading, losses happen. They're all, as you can literally see from the numbers in front of you, like it's all factored in. This is exactly the same trading setup as these two were. These two won, this one lost. You know, add them up, you've won overall. It's not about never losing. It's about your wins outweighing your losses in trading. So that's my tip. If you're still struggling with taking losses as a beginner, I'd say you just need more data to show you the numbers. That will give you the confidence that in future, when prices, you know, at like this level already, you're still confident to take a trade, knowing that you might lose. But it's fine, because when you lose, you only lose 1%. When you win, you make like 3 or 4%. You know, if you win half the time, lose half the time, you've made money overall. And that's trading. That's just the nature of the game. So yeah, this trade lost minus 1%. Last trade of the week, this was my day trade on Euro USD. So let's go to day trade. So here was the trade that I took. I'm going to go on the clear charts and show you how I came to it, but yeah, took an entry from this order block up here. That's going to be a 6.3 hour trade when it hits total. So far we've just hit TP1 here at this level, which was a nice 3.5 hour trade or thereabouts. So I'll lock that up, and yeah, you can see there 3.5 hour trade, 50% of the position off at TP2. So all of this is based off risking 1% per trade, which if you're on a funded account, that's kind of what you should do. Personal accounts, you know, if you're comfortable with it, you can risk like 2 to 3%, even 5% if you're pretty comfortable with your max drawdowns. But yeah, that was a 1.76% trade closed off this TP1. My stop loss is now at break even as well, so that's just running risk free. This is the only open trade that I've got. Let me go in and show you on Euro USD how we came to this conclusion. Okay, so it all starts off on the higher time frame. Okay, and what I looked for is the overall daily levels. Okay, so this was actually double top region, and then we're actually looking at these three lows here that are sort of like a triple bottom. I would just call it like a sideways channel from these lows and these highs. We saw that this low was broken, so this was our break of structure. We go in deeper. Because that whole structure was on the daily, I'm now going deeper on the 4 hour. Okay, so after that 4 hour, here was our sort of first instance of a substructure. So this is what we call substructure, where this level is broken. The reason it's not this is because this is just kind of a wick back in the level, whereas this is like a full-on close out of the level, forming a substructure. And then once this level breaks, this is now the confirmation that I'm looking for sells. Okay, so yes, this, you could have at the time plotted this as a substructure, but you know, it didn't really like break for me. It came back in the level, so I'm still classing this as like the last part of that channel. But even if you did class this as a substructure, you could have even caught a trade off of this re-entry, but I would just like to play it safe, because you know, that's a huge daily like swing sideways channel. So you really want to wait to see your substructure break and close beneath for this one. So I called it here. This was my substructure. Once a substructure broke, this is what I call a break of substructure, or boss. Nice little analogy. So once this broke, this is now my confirmation that we're looking for sells. You can take the SMA off because I don't really use it for this. What I'm looking for now is my fib levels from this high to this low, like this. And then I'm looking for, on the 4 hour, areas of imbalance. Imbalance, if you don't understand imbalance, they're just areas of inefficiency in the market. So they could be fair value gaps, they could be order blocks, they could be displacement candles that have order blocks and fair value gaps from them. So they're the main things that I look for when I'm looking for sort of inefficiencies in the market. So I'll start from the bottom upwards, and I'll look for like above the 50% level. Okay, so here's a FVG. There's your fair value gap. I'll do a whole video on fair value gaps and order blocks if you don't understand them right now. But basically, fair value gaps is where you have just a gap in the candle. So notice how all of these candles have like a candle before them where there's not a gap, but this is like a gap. There's no candle before it and there's no candle after it yet that has covered it up. This candle breaks this fair value gap, okay? So there's one. This is a fair value gap. There's two. This is a order block, this candle. Again, in super simple terms, an order block is basically the last, in this case anyway, it's the last upward candle, this green one, before a downwards set of candles that cause a break of structure. So this is an order block, and then this is an order block as well. So these were the main areas of efficiency which I was looking for. And get rid of this one because it's below the 50. This one, is not really as relevant anymore because we've got higher ones. So whenever I'm looking for where to enter from, I'm looking at my fib levels, which tell me like the popular targets for price to come up to. 78.6 and 71% are the areas where you'll get good entries from, because you get a deeper pullback with a higher risk to reward. Because I'm seeing order blocks in areas of efficiency above the 78.6, I'm looking to enter from the 78.6. So here's where I got my entry. My stop, I put a couple of pips above that high. And then my TPs, I use the third TP there, so these 3 fib extension levels, and that gave me a nice 6.3R setup. And that's what happened here. Price came up, tapped into these order blocks, retraced, and now pushed down. I've took my TP1 here, like I showed you, at 3.5R, and now I'm just letting it run to TP2 and TP3. Now, interestingly, we had this same setup on GU. So GU is very correlated to EU. So EU and GU, they're like 90 to 95% correlated. So if anything happens to one of them, you kind of expect it to happen to another one. The difference is with GU, so here's the equivalent break of substructure that we had on GU, retraced up. You could have caught that same trade. The setup on GU wasn't as deep, so it only gave a 4.5R trade, whereas EU gave a 6.3. So I took the trade on EU instead. Now, the full trade has actually played out on GU, where it's made the 4.5R already. We've had the break of substructure, retracement, and the entry. That was the same. EU has only just reached that previous low for TP1, which was here on GU. So you can imagine that's where EU's at right now. Whereas GU has already hit TP2 and TP3 on Friday. Okay, so the whole concept of convergence, when you're looking at correlated currency pairs, is that basically is a hint that that is going to happen on EU. It's not guaranteed, but these two pairs are like 90 to 95% correlated. So it's kind of like this move is lagging behind this, which, you know, is a very sound concept in trading with correlated pairs. Now, interestingly, what happened with GU, so there's the last trade that I took, and we're still in that, okay? A setup which I'll give you away for free is my EU setup here. So this now, what I'm looking for is we had a 1 hour break of structure, which was this correction. If I go on the 15-minute, this was the first substructure that formed, broke. We were looking for a trade off of this, retracement up here, but it didn't retrace high enough. It was only a short retracement, so we didn't catch a good entry from that. What we're looking at now, if I get rid of that, make it a bit clearer. Oh, in fact, it's locked. I'll keep it on there. Just bear with the fact that there's a fib level already on there. But basically, we've now broke beneath again this low. So this is our third break of structure. What we're looking at is for price to retrace up to this fib level. Area of interest is this obvious fair value gap here. That's just too big and obvious. I'm not even drawing it. But we have an order block above it, which caused it. And we have these double highs, this double top that is a liquidity level that we're looking to be swiped. I'm happy and sound for my entry to be tapping into that order block just above the 78.6, even though I feel like these highs will be liquidated. Even if these highs are liquidated, if we got an entry here, it's like an 11R setup. Versus if we get our entry here, it's a 6.4 setup. But our stop loss allows for this scenario to happen, and we still make like 6.4R, which is fine. But if we have an entry here, yeah, we might get an 11 if that happens, but what about if this happens? We get nothing, okay? So having this is like the best worst case. Well, it's not the worst case in either scenario is losing 1%. And that's always the worst case on the trade. But in terms of the trade playing out, this one gives us like the best worst case. So I'd rather make 6.4 in the worst case than make nothing in the worst case. You know what I mean? It's plenty. Like, you can't be greedy with making a 6.4. So that's the setup that we're currently looking at. Same as before, where we've got breakup structures aligning with the overall bias. So we're looking for a retracement to an inefficient level in line with the fib levels and then keep trading down. This is a very, in my opinion, this is a very high conviction setup because we've already seen this happen on GU. We're just waiting for it to have, like, this is lagging behind what's happening here, okay? So very similar setup. You can also do the same on GU as it actually happened. I didn't take this because it was on NFP, so this was actually on Friday, and it was the NFP candle which like hit the full TP, but same concept on GU. You can follow this move down. We've had another break of structure here, break of substructure on the 15-minute here. There's your change of character lower. So when I'm trading like a trend line break of structure, I'm still looking for that last low to change character to push lower. I'm not saying this is the break of structure. It's just that is the structure and it's broke, but I'm not actually looking for, when we're looking for the retracement, like I'm not looking for it off that level there. I'm looking for after this change of character happens, then I'm looking for what you can see here, which is the high to the low, like that. Price comes up. We're looking for an area of an efficiency, which on this setup here was this 1 hour fair value gap, if you can see that. So that's what we've plotted there. Now let's look on the 15 minutes so it's clearer. Top, bottom, there's your fair value gap. We were looking for the 71% level because that's, the next area above this inefficient level. And it was also these highs. So these highs being liquidated like that. You can see that's what happened there. We caught an entry off the 71 because it was a sensible level to pick. That's something that you sort of get used to with intuition, is which fib level to pick. Match it up to the areas of inefficiency or where you think price is going to be drawn to. This high almost got liquidated, but we've stayed like 1 or 2 pips above on a 15-minute, so that's fine. This trade would have been a 4% trade in total, or 4 RR in total. I didn't take it because it's on an NFP, so it's always kind of volatile. You never know, like the broker might have added so much spread on during that NFP that this might have even stopped you out, so it's always best to just not trade a new setup on NFP. We did still get the NFP exposure because it was this candle which took us down to TP1, so we did still make money on NFP. We just weren't looking for like bang a setup on the NFP hour. Like it's just gambling because of all the extra slippage and spreads and volatility. If you've got an open trade, then yeah, that's fine to hold in my opinion, but I wouldn't look for like a trade on the actual NFP candle because there's just so many factors that throw off the edge basically. But yeah, using the strategy, GU would have made 4.5 already, plus another 4R stacked, but because this is a 6.3 on EU, this is the trade that I took instead for more money. It just takes more time to play out. So this will be a 6.3 when that hits, and using that convergence, it gives us a lot of confidence that this, is going to be the same setup, but instead of catching a 4.5 and a 4, we're catching a 6.3 and a 6.4 for a move that we've already seen play out on GU. Okay, so that's the last little snippet that I'm going to give away for free on this video. This kind of education, these kind of insights, this sort of analysis, this is what you get inside the VIP group. You'll get weekly analysis breakdowns over all of the pairs that I'm looking at, not just like what was taken this week and here's it after the fact, but you'll get the call outs of when I'm updating my analysis, when the trade's been hit, the signal call outs, all of that good stuff inside the VIP group in full. So I hope this has been a good educational video for free on YouTube. If you want to see those intraday trades, have a look on the live section of my YouTube channel. You'll see the one I took on Wednesday. I will re-upload the analysis that I did on the TikTok live on Monday, which TikTok took down. That was a bit of a mouthful, wasn't it? TikTok took down. But yeah, I'm going to re-upload that so you can see the analysis, and I already did post it after the fact, so you can see that I actually took the trade as I showed it on TikTok on my MetaTrader. Nothing to hide. So yeah, hopefully this has been really insightful. Let me know what you want me to cover on some videos if like it wasn't enough detail here. So for example, order blocks, fair value gaps, imbalance candles. I'll make some explainer videos really breaking those down, but there is plenty already on YouTube. But I'll make some myself just to show you like my version of them because everyone sort of sees things differently. But yeah, all in all, this week I made 7.64% when using 1% risk per trade. If you were using 2% risk per trade, you would have made like 15.28%. And then obviously 3% per trade. 3% per trade is like 22% or something ridiculous like that in a week. So yeah, there's the whole trades for this week for me, mainly GU and EU. I do look at other pairs. I'm not going to give those away for free on YouTube there, what you get inside the VIP group. But we could have caught a lot more trades this week with those other pairs. However, with this being like the first full trading week back of the year in January, I kind of took my foot off the gas a little bit. I didn't want to be full on risk on, especially since it was NFP week on Friday, which we actually made money from. But obviously, if we were too overexposed, we might not have. However, from now on in the coming weeks, I'm going to trade a lot more pairs than just EU and GU, and you'll get all of them inside the VIP group as well. If you want to know, the VIP group is £50 a month, and there's a lifetime option for £200 one-time entry. That's what it is at the moment. Once we convert to a Discord group and add a lot more value in there in terms of like crypto, stocks and shares, health, self-development, stuff like that, we'll be up in the price, but you can lock in now for the current price. So, all being said, week 1 was like 5.25%. Week 2 is now 7.64%. We'll see how our current trades that we're looking at play out for the week and what other intraday trades I take this week. If you want to catch them and see all of them, join the VIP and you'll catch every single trade that I'm placing here as well and make the same returns that I am. So, all being said, I hope this was a really educational video and I'll see you next week.